welcome. Jim, my first question coming to you over here is I'm sure you would be expecting it with regards to crude, where we actually had the May contract which dipped below zero. I mean, did it actually come in as a dream, or do you think it was more of an aberration where we probably wouldn't see a situation like this again?
It was an aberration, partly because it hasn't happened before, so we know what to do. It can happen again. It's unlikely to happen again. But nobody actually went out and could buy and sell oil at those prices. The price of oil in Europe was still in the 20s. The price of oil in America was still in the 20s. So in the real world, oil was still selling, buying and selling. That was on the futures market. It was an aberration for the way futures markets work. It could happen again. There's nothing to say it cannot happen again, but it's unlikely.
Right. So, Jim, do you think probably now $50 or probably even a $30 could become the new normal or become the new $100 for oil?
What will become the new normal?
Do you think that $30 could become the new $100 for oil?
Well, oil is going to be down for a while because there's a virus and the whole world is closed down here. When people aren't driving and aren't turning on the lights and going to work and things like that, there's not that much demand for hydrocarbons. So yes, it's down. It will be down for a while. Yes. But part of the reason for this is because fracking came along. Fracking was wonderful. Fracking became a bubble. If you could spell fracking, people gave you money. And so we had lots of huge new production coming on. But now people realize, oh, this is not magic. They have to make money. They have to be efficient. We now know that the fracking bubble has burst. Fracking still exists for people who are efficient. The added supply from fracking is going to cut back. And once people go back to normal, when they're buying and selling and going to work and school and things like that, demand will go up and oil will not be $12 per barrel.
Right. Jim, another question I'm taking over here is, all this while there was a lot of power with regards to producing companies. Now there is a shift happening from oil producing companies to say oil consuming companies as well, with the way commodity prices are crashing. Do you think this is something which is actually going to be a pleasant moment for oil importing countries? And if yes, are we seeing an unexpected nirvana, say, for countries like China and India?
Places like India, China, Korea, Japan, I mean, they're wonderful. I think this is fantastic. Germany, it is, because they've suddenly had it's like a big tax cut. All of a sudden, their cost of doing living or cost of doing business has gone down a lot. If you're in Saudi Arabia or Sudan or other places in the world, you don't think this is so good. No, it's very perceptive. This is good for India and good for countries which are net users of oil.
Right. In fact, Jim, my colleague Kunal also has a couple of questions for you.
Hello, Jim.
Good morning. Good afternoon, Kunal.
Good afternoon, Mr. Jim. My question to you is: I have been following you from the year 2002, and you have been saying that if there has been if the growth is slowing, central banks will print money, so you buy commodity, and if there is a growth in the world, then obviously commodity prices are going to go up. So we were in a secular bull run of commodity. Right now, the way things are placed, we've seen the kind of monetary easing what is going on in the world now. In spite of that, commodity prices are going down. So my question to you is: are we heading towards deflation? Is it pointing towards deflation, or this money printing going on? Is it going to really help to recovering in commodity prices?
Well, Kunal, as you know, I'm sure you know because you know Nirmal Group. Demand for everything is collapsing all over the world. We're having so far this year, we've had one of the worst economic periods in a long, long time. It may turn into the worst in my lifetime. I expect it to. So demand is down dramatically for everything, whether it's cotton or silver, or copper or oil. So that's why prices are down. Yes, everybody is printing a huge amount of money. And if history's any guide, ultimately, that's going to lead to inflation again, especially since lower prices we just discussed are going to cut supply. You know, some of these guys are going bankrupt, some will go out of business, and so there'll be lower supply at a time when there's a lot of money being printed. History shows that will lead to inflation. Right now, it's leading to deflation. With a lot of people going bankrupt, a lot of people having dumped their supplies. One of the major oil traders in Singapore just went bankrupt yesterday. He has to dump huge amounts of oil. Well, that drives the price down when you have poor sales of anything, by anything. So that's all that's happening. But when we go back to some kind of normal economy, even if it's a slower normal economy, and we have huge money printing, that normally leads to inflation.
Yes, Jim, and yes, you have been bullish in bullions ever since the commodity secular bull run started. So I remember in 2007-8, you used to say that gold is going to go much higher. You were giving levels of $2,000 at that time. So in this current environment, what is the view on gold, considering so much monetary debasement is going on and so much gold is being bought by central bankers? So where gold is heading from here?
Well, as you may know, in 2010, 2011, I stopped buying gold. I was quite adamant that, gold had straight up for a while. It turned into a little bit of a bubble, and I explained that I would not buy gold. The gold would go down and stay down for a while. But then in the summer of 2019, I started buying gold again and silver. At the moment, I'm buying more silver than gold because silver is cheaper than gold on a historic basis. I'm buying gold, I'm buying silver. Here's some silver right here. I'm buying gold and silver again, and we'll continue to, because before this is over, there's going to be a lot of turmoil. A lot of people are going to lose a lot of confidence in governments, in money, paper money, and whenever that has happened throughout history, many people buy gold and silver.
Mm-hmm.
Governments and politicians and academics say not to. But listen, I'm a peasant. I'm like all the other peasants in the world. We don't care what the academics say. We know that silver is silver. We know that gold is gold. And we're going to buy more gold and silver to protect ourselves. Let the academics say what they want.
Sir, you have been very bullish on Chinese economy, and it's been a while where we are seeing some bit of contraction over there also. So what's your outlook on China? And then what will be the outlook on the base metals and the metals, ferrous metals like steel going forward?
Well, again, the whole world is in an economic slowdown, an economic downturn. So that's affecting everyone, including China. You cannot escape in the whole world, America, Europe, Japan, everybody goes into a downturn. Everybody will go as well, including China. China so far is doing a less bad job than the West. In China, they still have interest rates. Interest rates are 2, 3, 5% in China. In America, they're zero. Japan, they're minus zero. So China so far is being a little more sound. Yes, China is spending a lot of money on its economy, but America and Japan went nuts. This is staggering what they're doing in the United States as far as adding debt. So China's doing less bad, but that doesn't mean China won't be affected. It's certainly going to be. Everybody's going to be affected. Even if Mr. Moody does everything right, and he's not, but if he does, he's still going to be affected, I assure you. So no, everybody's being affected by this, including China. Having said that, I bought a couple of Chinese shares yesterday. I bought a Russian shipping company yesterday. Some things are really being beaten down a great deal. And even if the world continues to get worse, which it probably will, some things may be okay.
Right. In fact, Jim, one question I want to take with you is, you mentioned about China, you mentioned about India. The books that I read, what you've written, you've always said that you love India. You advise people to go visit India, but you've not really looked or invested in India. Do you think this is the time then to start looking in India, looking at India as an investment bet?
Nirmal, you are a good reader and you have good insights, yes, I have invested in India at times in my life, not nearly as often as other places perhaps. And you raise a very good point. I probably should be looking at India now. India has to have come down. I know everything has come down everywhere. I have not bought anything in India right now, but you make me. This week I've started thinking, India, India. Let me look and see, because it's one of my. If you've read my books, it's one of my favorite countries in the whole world. I tell everybody all over the world, if you can only visit one country in your life, it should be India, because it's the most exciting. It's astonishing to walk down the streets in India. It's just a constant sensory feast. The man-made sights, the natural sights, the smells, the food. The women are gorgeous. The men are handsome and smart. I mean, it's just an amazing, amazing place. It's got the worst bureaucracy in the world. India learned its bureaucracy from the English, and then took it to a higher plane. But no, at the right time and with the right people, there can be great investments in India. I don't have anything in India now, but this week has made me say I should look again.
Absolutely. Right. So overall as well, Jim, what's the view that you have even on the liquidity infusion front? Because time and again, you've said that central bankers are printing money, and that's something, which is going to help us. The liquidity infusion is going to help us as well. Now, taking this into consideration, again, what's the sense that you pick up on the US dollar? Do you think it's time to still put your bets on the dollar? Where do you see that?
Well, I own a lot of US dollars, not because it's a sound currency. The United States is the largest debtor nation in the history of the world, and it's getting much worse every day. But for historic reasons, people think it is a safe haven, and in times of turmoil, people look for a safe haven, and they don't think the euro is very safe these days, or the pound sterling, or some of the other currencies around the world. So I own a lot of US dollars. As the turmoil gets worse this year and next, the dollar is going to get overpriced. It might turn into a bubble, depending on how bad things get. I hope I'm smart enough at that point to sell my US dollars. I don't know what I will do. Often when that happens, gold and silver go down. Maybe I'll put my money in gold and silver if they're down or not up as much. Maybe the renminbi, if the Chinese currency is convertible by then. Who knows? I don't know. But I do own a lot of US dollars at the moment. But I also know that this is going to be bad in the end for the dollar, because people are going to say, oh my gosh, look at the debt, look at the money printing, look at everything.
Right. Jim, we have Rahul as well, who's joining in, who has a couple of questions for you.
Thanks for that. Hi, Jim. How are you?
I'm fine, thank you. Good afternoon.
Good afternoon. Jim, there's a lot of talk about what kind of a recovery we might see in global markets. There's been some extensive stimulus given out by the United States, Japan, China. India has tried to do its bit as well. So it's sort of a two-part question. One, do you expect this to be more a global emerging market recovery to be more prominent as we enter the second half of this calendar year, or it's going to be a developed market-led recovery? And do you see more stimuli coming in from major global emerging markets?
Well, first, there's a difference in markets and economies, as you very, very, very well know. You ask about markets, so I'm going to talk about markets. I would expect the markets to have a nice rally. I mean, we're having a correction. We had a nice rally. We're having a correction. I would expect the rally to come back, because governments are doing everything they can to get markets up. And there's an election in America in November, so I assure you, all of those guys are going to do everything they can to get reelected. It's not good for you and me and for the world, not good for young people anywhere, but they're going to do it anyway. So I would expect the rally to resume, but eventually later this year or next, people are going to say, wait a minute, we've seen this movie before. We're not going to play this game. And then the market will go down, and we will have a crescendo, the panic, and markets will make a low, new lows, and maybe the bear market will be over in 2021. Say, I don't know. You should ask Nirmal. They can tell you when it will be over. But once it's over, I don't expect big, strong bull markets again, because this has done damage, serious damage to the world economy. Many countries and companies have added huge debt now and increased their cost of doing business. I mean, I live in Singapore. I know a guy who's got Michelin restaurants. You know, he had to close down because the government closed everybody down. You know, he's selling his wine cellar. He's going to be deep in debt in a month or two. This is a very high-class group of restaurants, but he's having to sell his wine cellar. I'm buying some of it. It's going to be a mess. So when the recovery comes, he's not going to suddenly say, "Oh, hooray, things are great again," because there's a lot of damage that's being done to him and everybody else. So I would not expect a roaring bull market again for a while after the damage. Normally, when you have big damage to markets, it takes a while for people to forget, new people to come along, and for the really roaring bull market to start again. That's the way that markets, the investment markets, are going to react. And you ask about markets.
Your point is well taken, Jim, and I appreciate your points that you're making on the global economy as well. But given the impending election that you've spoken about in the United States, do you think, and I press on from my first question, that the recovery that you'll see in the world, will it be led by the United States, or do you think that the demand revival that you spoke about a little earlier in this interview could be probably more generated from the emerging markets?
Well, I expected places like Korea, China, Vietnam, Taiwan will probably come out of this sooner. Maybe India. I have to go back and look up my homework, as Hiral has already told me. I would suspect it's going to be coming more from the markets that are the places that are spending a lot of money. I mean, the Bank of Japan goes to work every day. The banker, the head of the bank, he turns on the printing press. He runs it as fast as he can. He was buying ETFs and bonds, but now the government is giving him permission to buy stocks. The guy's overworked. He runs the printing presses so fast. He's buying everything in sight. So yes, some markets, if you consider Japan a developed market, Korea, China, I guess, is an undeveloped market, but as I said, China doesn't seem to have done as bad a job as other places. So I would expect the recovery to be led from Asia, but the U.S. is doing its best too, because we have this election this year, this November. So, but you know, Raul, it really doesn't matter where it comes from. It's coming. Some areas have been totally smashed: transportation, railroads, airplanes, hotels, restaurants. You know, these are going to, I mean, they're nothing now, they're dead. But so when they revive, they're going to start having a good revival, a nice revival, the ones that are still surviving. So that would look good too, but that's developed and undeveloped markets.
When you say you look at India in the not too distant future, Jim, what makes you take that call? Is it because valuations are fairly tempting right now? Or is it just the size of the market and you feel that perhaps you've been left out from a very large market from an investing standpoint?
It's because of Hiral. Weren't you listening? It's because of Hiral and Nirmal. You know, Hiral said I should look at India. Now, it's because India is a big country. It is a country that attracts people at times when they do things right. I'm not as big a fan of Mr. Moody as some other people are. I once invested just because of Mr. Moody, and he's had a great history. But no, India's right there in Asia. If Asia does better, it's bound to help you, help India as well. And if the markets are down enough, and if there are opportunities enough, and I do not know, I'm going to look. Hiral has told me I should go and look. I am going to go, and maybe I should ask Raul. You tell me, Raul. I'm sure that the Indian tourist companies are smashed, just like everybody else. India can be and has been a great tourist country. Maybe I should be investing in Indian tourism.
So, if I was to understand you correctly, you say that if the revival in the Asia Pacific region is to be revived, it is going to be more China centric, and therefore you would probably expect them to do a lot more to lead this growth than your views perhaps on India at this point. Would that be a correct assessment?
Yes, I guess that would be a fair assessment. But once I look, I may find that India is better. If India is down a lot more, if India is cheaper, then maybe it's time to, markets are certainly one of the major factors in looking at any market is price. And if India is cheaper, then one should be focusing on India instead of maybe Japan or China. Japan, I will just repeat again, the Japanese central bank buys shares every day. I mean, I'm not a very smart guy, but if somebody with as much money as the Bank of Japan buys shares every day, maybe I should be buying shares there too. I don't think the Bank of India is buying shares every day. I don't think the People's Bank of China is buying shares every day. So it really depends on the country and the circumstances in each country.
Fair enough. I think it may be worth more than a look, Jim, because we speak on a day where Facebook has actually invested in one of the largest market capitalization companies in India today. And it's probably causing a lot of news globally. So I think if Facebook is definitely taking their view, you could probably revisit your thoughts on the demand perspective that India has to offer. But that being said, I think Hiral has a couple of follow-up questions for you. So I'll hand it back to her.
Okay, you're off. What next?
In fact, yeah, right. In fact, Jim, another question I want to take with you is, I think a couple of years ago as well, when we were talking, you've always said that the best place to invest is going to be the agri side of business. In fact, probably a lot of people have stocked a lot of sugar as well on your advice. From here on, what is the commodity that you would, on the agrarian side, advise to stock up?
Well, I mean, you can look it up as easily as I can. What I do, if I were sitting here and you were sitting here with me, I would get out a book or they'll go online and see what is down the most. I mentioned you sugar before. Sugar is down something like 80% from its all-time high. There's not much in life that's down 80%, but I would look to see which agricultural products are down the most. And you break my heart because India has been at times in history one of the world's 8 great agricultural nations. You've got the weather, you've got the soil, you've got everything. And yet the Indian government keeps messing it up. They keep messing up poor Indian farmers. The high rate of suicide in agriculture in India because the government won't just get out of the way and let those smart Indian farmers get rich again. So yes, sorry, I got distracted. Look up to see which ones are down the most. I think you'll find things like sugar are interesting on a historic basis.
Right. And overall as well, Jim, when we've been looking at India right now, uh, there are a lot of, as you already mentioned with regards to where bureaucracy goes, the kind of role the government plays as well. Now, in this kind of an environment, where should an investor actually look for safety? Yes, I do understand you're saying that silver is something that is actually playing the catch-up rally, and silver is something we should be looking at. But between equities and if you have to look at the commodity side from a silver and gold perspective, would the bets still be on the commodities end?
Well, between equities and commodities, I would say agriculture commodities are certainly a good place to be. But back to equities, I mean, I live in Singapore. The airport is closed. The airline is out of it, not out of it, but I mean, essentially, they're not making any money. Nobody's making it. The airport's closed. So airlines not just in Asia, all over the world are being driven down deep discounts. So things like that have got to be interesting as a place to look. What the Indian Airlines go bankrupt recently? And other airlines are going bankrupt. No, it's crazy. Airplanes are sitting out there on the tarmac.
Yeah.
There've got to be great opportunities in things like that.
Right. So overall, Jim, right now as well, I think Kunal has a couple of questions. Kunal, go. You can go on.
Yeah, Jim. My point is regarding the stimulus in China. So, what do you see from here onwards? Are we going to see another measure being announced by the Chinese government? Because till now we have not seen any massive stimulus the way US or the way the Japan or the European government did. So, how you see? Do you see that China is going to come up with the last stimulus like they did in 2008?
Very insightful, Kunal. I would suspect so. Yes, I said they haven't done as crazy as what some of the other countries have done, West or Japan. But you know, they have politicians too, whether they call them politicians or not, members of the party. Uh, if pressure gets bigger and bigger and bigger, they're going to do more as well. I don't expect this economic recovery to be great. It's going to be, we're going to have a big rebound for the reasons I told you. But I don't see this as a sustainable recovery, not for a while. So there are going to be more people complaining, screaming, squawking. And so, sure, I'm sure China's going to do more than they have so far. But, you know, China, at least, as I said, China still has normal interest rates. China still hasn't spent staggering amounts of money, gone deep into debt like the U.S. and Japan and other places. So they have more reserves than the rest of us.
Yes, Jim. And another question which I have is, we all know this Japanese economy is in a deflation from last 3 decades. So the way the US 30-year bond yields are below now equity dividend yield, does it mean that even US is going to same the similar sort of scenario what Japan faced 2 decades back?
In 1920, the richest, most powerful country in the world was England, UK. But they started making a lot of mistakes. You know the rest of the story. They're not even in the top 20 or 25 anymore. Still there, but the comparative standard of living for a British citizen between 1920 and 2020, oh, it's frightening. So that is what's happening in some parts of the world now. Some people are making mistakes that are going to cause their children and their grandchildren to live not nearly as well as they live. Japan is one of those countries. The United States is another of those countries. My children, I mean, this is what's happening is not good for me, much less my children, much less young people in the United States. Some countries get it right always, some get it wrong always. I don't like what Japan, in fact, I'm just publishing 2 books next month, and next month about a warning to Japan that Japan has got very serious problems facing it. And that the standard, Japan's in decline. They don't like it. They hate that. But I just face facts. It's not the opinion of some crazy foreigner. The debt skyrockets every day. The population has been going down for 10 years. Now they're printing more money. This is not an opinion. This is arithmetic. This is simple addition and subtraction. So that's what I'm telling the Japanese. They should be worried. If you're 10 years old in Japan, well, you look older than 10 years old. But if you're a 10-year-old Japanese, you should either leave or you better learn self-defense because things are going to be tough when you're 40 in Japan. But I mean, America's doing the same, making them the same mistakes too that the UK made 100 years ago. Is this good for my children? No. Is it good for me? No. But certainly not for my children.
And Jim, you have been known to give a very flamboyant target in 2008. You said at that time that gold is going to go much higher, maybe $2,000. So now what is your next target for next 5 years? What do you think where it is heading? I know it is very difficult to quantify, but where it is heading from here? I would really appreciate if you say it.
Kunal, it's not difficult. Ask Iran. Ask Nirmal. You know, they know. Gold will make the old high for gold was 1,911 US dollars an ounce in September of 2011. Gold will certainly make new highs during the coming period. That's certainly over 2,000. But how high? I don't know. It depends on the mistakes that governments make. They always make a lot of mistakes, make things worse, whatever the situation is, and that's going to happen again. In some countries, currencies, the gold is going to go extremely high. In U.S. dollars, first, U.S. dollar is going to go very, very high, which is going to keep price not so high in U.S. dollars. But once the U.S. dollar starts collapsing, then the price of gold can go to any number you want to think of. The U.S. dollar will lose its status probably in the next decade of what it has been for the last 100 years, last 80 years. So, but the number will not. If I said to you $4,000, come on, it's meaningless because the dollar is going to be changing its value as well. The rupee will change its value. The rupee today is what, 68? I don't know, 68 today?
It's 77.
How much?
It's nearing 77. It's nearing 77.
Oh my gosh, I am out of it. I should be looking. Could not be looking again. The currencies change their value. So gold is up a lot in terms of rupees. It's up less in terms of U.S. dollars or Japanese yen. So it depends on the currency. But the point I'm trying to make is the currencies also have a factor in how high the price of gold goes. It's already skyrocketed rupees. It hasn't skyrocketed as much in yen or U.S. dollars. It will. Don't worry. It will.
Okay. Jim, just one question, Rahul, back here. So if you had $100 to invest as on today and look at asset allocation, you distribute that $100 between fixed income, that is debt, equities, commodities, and currencies as on today. If you say had a 12 to 18 month horizon, how would you allocate your own assets?
Well, if I had $100, I would call up here all and say, let's go to dinner. let's go talk about it all over the world. I don't know. Let's see. To answer your question on a more serious note, agriculture would have a lot of it. U.S. dollars would have a lot of it. Beaten down Asian, but when I say Asian, I mean Japan and China mainly, and Russia. I bought a shipping company this week. Some of the beaten down companies in Asia, equities, would have a position. I would be short U.S. government bonds. My shorts would be mainly United States government bonds. I can't think, or some bonds, U.S. government are liquid and easy. So agriculture, beaten down shares in Asia, Russia's hated. Russia has a lot of resources. It's not a huge debtor. Come on, I said agriculture, so I'd be putting agriculture, dollars, Asian shares. My shorts would be U.S. government bonds. That's more or less it.
That's fair. That's fair.
Answer your question.
Yeah.
Answer your question.
Yeah.
Well, I don't have a committee, so I don't sit around thinking in these terms. I would have to have allocations every week, but fortunately, I don't have a committee in my mind.
No, I appreciate that answer, Jim.
I do not hear you here all.
Yes, can you hear me now?
Now.
Yeah. So a lot of questions pouring in, Jim, for you. The first one coming in is from some Abhinav Mittal, who's asking that, do you have any suggestions for the Indian government to make things right? And what are the things that the government is actually doing wrong right now?
I love India. Yeah, I would. You think they're going to listen to me? No, of course they're not. But if I were Mr. Moody, I'd resign. No. I will say, one of the things that I frequently said about, your central bankers the last 3 or 4 years have been much better, or certainly less bad than everybody else in the world, including America. You had, what was the guy that won before? I mean, he was really, really smart. I wished he would go to Washington and run the American Central Bank. I don't think America's going to let an Indian run our central bank, but he was really, really smart. So I guess what I would do if I were Mr. Moody, I would make the currency convertible, make it so that anybody could buy and sell and invest in India. You've got all this blocked currency now. It's difficult to invest in India. Yes, it can be done, but it's not like picking up the phone and investing in Germany. Either the currency or the bond or the stocks. That's a problem for India, if you ask me. Agriculture, they keep protecting agriculture, and the farm keep getting worse and worse. It's illegal for an Indian to own more than 5 hectares of land. Now, how can anybody compete with Australian farmers or Canadian farmers? You can only have 5 hectares of land. When a Canadian farmer can buy 500,000 hectares of land. So I would open the markets, the currency market, the capital markets. I would open agriculture, totally eliminate all restrictions on agriculture. And I think, India's got so many smart people, but they have been held back by your government in many times in your history. So I would open it up. I would totally open it up. But you're wrong.
Right.
Mr. Moody's not going to listen to me. I assure you. I promise you.
You never know. You never know. At times.
I do know. And I would cut the debt. Oh. And I would balance the budget. I don't know how many times I've heard Indian politicians say, oh yeah, we're cutting back on the deficit. The deficit's there every year. One of the drawbacks of India now is that India has debt. India didn't have any debt 40 years ago, but India now has debt. So I would cut the deficit, I would balance the budget, and I would have a surplus.
Right. In fact, on this question, as well as another question, Jim pouring in saying, how safe is it to use leverage, and what kind of investors should do so?
Well, if you can handle leverage, you can make an unbelievable fortune. But most people who use leverage go broke and disappear. Leverage is beautiful and wonderful. I mean, it's magic, but it's also very, very dangerous if you cannot handle it or if you start making mistakes. I don't use leverage now, just A, because I don't need to, but B, because I know it's a headache. It's work. If you have a lot of leverage, it's a lot of work to make sure you don't do something terribly wrong. So leverage is fabulous, but only if you know what you're doing, and it can destroy. It destroys more people than it helps. It's like a Porsche. The sports car, the Porsche sports car.
Yeah.
To drive a Porsche from Mumbai to Delhi is wonderful. But it can be very, very dangerous if you don't know what you're doing. You're going to be dead on the side of the road in that wonderful, wonderful sports car. So you have to be careful.
Right, Jim. Another question is that since we have developed the habit of working from home, and the companies never thought of working in this way, the experiences are changing, right? So now many IT companies, probably bankers, are looking to start continuing working in the same way. Brokerage houses as well considering the same. Do you think this is something which is going to have an economic impact, probably in the long run for companies like, say, aviation companies, auto companies, crude, again, because the demand probably could shrink?
Well, certainly education is going to be on the internet in your lifetime, and this is just going to accelerate that sort of thing. In America, I'm going to use America, we have something like 30,000 teachers who teach Spanish. Well, we don't need 30,000 Spanish teachers. You can have 3 on the internet if they're good ones, and the kids would probably learn better. So yes, this is accelerating some trends which are already in place. Working from home, yes, if it works, Now, some people will be very, very, very efficient working from home. Some won't. So it's not going to affect everybody the same. Some people will rise, like students. Some will do well, some will not. But there will continue to be a need for offices because a lot of what happens in companies is in the office. The fertilization, the cross-fertilization of ideas and new approaches and everything else. Uh, Maybe in 40 years we would have the same kind of thing, interaction on the internet, but that does not exist now. So we will still have offices, and we still will have business travel. Maybe not as much. Because Zoom and things like that will make it less necessary, perhaps. But I would not give up on oil and airlines and travel in the
Right.
future.
In
It
fact,
may
another,
well be, by the way, here it may well be down because the economy's down.
correct.
The economy, there will be some changes in human behavior,
Behavior,
but the
absolutely.
economy is going to be down too, and that's going to affect a lot of travel.
Right. Another one is, what is your view on dharma, which is righteous conduct? Can a society build economic value without a sense of dharma?
Spell the word.
Dharma, dharma, righteous conduct.
I mean, that sounds like Indian magic.
Yes.
Well, I told you before, India is one of my favorite countries in the whole world. The countryside, the man-made sites, the natural sites, the women, the men. I mean, it's just such a magnificent. And the philosophies and the religions, it's just astonishing place. So I am not completely familiar with Dharma, but it sounds like it's more Indian magic, and I am more positive on Indian magic than I am negative. So next time I'm in Mumbai, all of you can go and teach me about Dharma.
Right. Jim, I think this is the last question we'll take. Does US plantations in coming season depend on the US stimulus money reaching farmers?
Well, yes and no. No, most farmers, even if nothing had happened this year, were ready to go into the fields and are in the fields now, whether the stimulus money comes or not. What is more a problem now this year is making sure they have people to go into the fields, enough labor for the reasons that you well know. That problem seems to have been solved. Mr. Trump has not thrown out all the immigrant labor, so there does need to be enough people to go into the field, but it is a bit of a problem because of the epidemic. You know, you don't have as many people as accessible as you can in the U.S. I won't speak for India or Russia or Germany or places, but yes, the fields will be, you have people, farmers will produce goods in America this year, whether the stimulus money gets to them or not by next month. They're going. Because
Right.
if nothing else, well, the banks know the money's coming. So the banks will lend the farmers the money, knowing if the farmer has to go into the field in April, the bank will lend you the money, knowing that the stimulus money is coming.
Right. Jim, I think two more pouring in. How much time will it take for the global economy to recover? And secondly, what's your view on trading agro commodities in India for broader commodities, say soybean, wheat, and maize?
It's going to take a while for the world economy because, as I said before, there's been serious damage done. The debt is skyrocketing. I mean, America's the largest debtor nation in the world already, and just in the last couple of weeks, America's added at least 2 and more like 4 or 5 trillion with a T dollars of debt. I mean, when you have a lot of debt, you can't run as fast as you could when you were debt free because you've got that debt hanging over your shoulder. So it's going to take longer for most countries to recover this time because there's so much debt. And you and I and everybody else, maybe not you, maybe not I, but many people have much more debt now or will have. So it's harder for the recovery to be as fast and as strong as before. Because everybody has added so much debt.
Hmm.
It's good for the next 6 months or a year here, but it's not good for the next 5 years or 10 years.
Absolutely. Right. Jim,
And
we'll end all the questions here, but I'm just going to take my last question with you. You said you're writing a book on Japan with what's happening on that front, but anything that we could expect on post COVID, how the world economy is going to look like?
no, I'm delighted you asked that question, and maybe I should think about that too. Um, no, I have these two books coming out about Japan and one about China. But maybe what I should do is thank you. I will think about it.
Yes.
If
So, Jim,
I do, I'll let you know. Okay.
absolutely. And probably, I think once you publish your other books, that's when I'm going to come back to you and have a conversation with you on how the books look like and everything.
Okay, but you must bring Kunal as
Yes.
well.
Kunal, Rahul, all of us will be joining you on the show, please.
You must bring Rahul as well.
And I think all the viewers, we already had 100 participants, Jim, who've joined us for live questions. So we will call you back for all of them, and I'm going to send you the video as well very soon.
Okay, thank you.
Thank you,
Bye-bye.
Jim. Thank you. Bye-bye.
Bye-bye.
See you. Stay
Bye-bye.
home. Stay safe.
Thank you. Thank you. You too. Same.
Thank you.
Everybody. Same.
Thank you.
Bye-bye.
Bye.